A rising number of COVID-19 cases and no progress on a stimulus bill led to a bumpy week on Wall Street, and the UK anticipates no deal for Brexit. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. Stocks retreated last week on rising COVID-19 infections and slow progress on an economic relief bill. The Dow Jones Industrial Average dipped 0.57%, while the Standard & Poor's 500 dropped 0.96%. The NASDAQ Composite Index fell 0.69% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, declined 0.05%. The market grappled all week with worries over rising COVID-19 cases and the economic restrictions that followed. Nevertheless, there were moments of optimism, such as the starting of vaccinations in the UK that drove markets to record highs. But gains could not be sustained as an agreement on a fiscal stimulus bill remained elusive, and daily news regarding COVID-19 cases undermined investor sentiment. Markets were also challenged by having to absorb a number of new and secondary stock offerings last week, including two high-profile technology IPOs. The energy sector continued its strong run, while small and mid-cap stocks posted another week of positive performance. The prospects of an agreement to manage Britain's exit from the European Union by year-end dimmed as the two parties failed to narrow their differences in a meeting held last week. Though primarily a European issue, a no-deal Brexit may hold consequences for U.S. businesses and investors. The failure to reach an agreement has the potential to disrupt an already fragile supply chain and cause issues in the financial markets. A supply chain disruption may weaken European economies, like Germany, that are important to American companies. Another consequence may be a stronger U.S. dollar, which would make American exports more expensive and less competitive. Little time remains in striking an agreement since the prevailing framework ends December 31st in just a few weeks. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. To learn how I give my clients life savings the attention it deserves, visit me online at www.erichagan.pro. If you'd like to get financially organized, go check out nocostfinancialdashboard.com. And lastly, if you'd like to take control of your 401k at work, visit us over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.